Okay, hi everyone, and welcome to our panel. So we're going to do introductions a little bit differently. Today I'm going to introduce the founders, and then I'm going to pose them a critical question about their startup that they have to answer. Okay, are you ready?
No. Help.
Okay, so first of all, we have Goslicki here, who is the founder of Bitwala. So Bitwala wants to enable its customers to transfer money abroad and save exchange fees and banking fees, right? And to add an extra nerdy factor, they do it in Bitcoins. So my question for you is, Jan, you have this really, hyped competitor TransferWise that does great marketing, has a big brand, and still they don't have a big revenue at all. And they are valued at $1 billion. So how do you think that you can ever make money in that market?
Good question, yeah. It's not about money actually in the market, it's more about time and saving time, and people have a willingness to spend money or to give you money if you solve a problem, if you're quicker than everybody else. And TransferWise, it still takes 2 to 4 or 5 business days to transfer money globally. And they will not make money because they have so much working capital, especially if it comes to, let's say, countries which are abroad, because they are not really matching the money. That's a myth, I would say, maybe in 5% or something like this. But most of the time, they collect all the money and they still transfer it overseas. And with Bitcoin, with blockchain, where you have a global system, you can avoid this and you avoid all these costs in binding the money, basically.
How fast are you then?
There are 2 business days. Or in the European zone, 1 business day. Or within a few hours if you do it during working hours.
Okay. Okay, thanks. Then we have Lamine from Cookies app. And Cookies wants to build a peer-to-peer payment app for friends that you can pay your friends back with. My question for you is, there are tons of apps like that already failed. What is your killer feature so that people actually finally start using this kind of service in Germany?
That's also a very good question and a tricky one too. So I think in general it's not about who did it first, it's about who does it right. Just to begin with, there are a lot of peer-to-peer payment apps out there, but they just don't provide the convenience that you actually need. So with Cookies, one thing that we did, we tried to remove friction everywhere where it was possible. So you can sign up in less than 60 seconds. If you would like to make a transaction and you make a super payment with us, the transaction actually clears in minutes. And the transaction happens from bank account to bank account. And this is a unique feature. So if you take a look at all the other peer-to-peer payment apps, those are actual real e-wallets. PayPal still is an e-wallet. So what happens there is you make a transaction, and obviously from an e-wallet account to another e-wallet account, the transaction happens in real time, because the only thing that happens in the background is a balance update. Minus 50 here and plus 50 there. But when you actually want to provide full accessibility, first of all in the products, if it's in multiple language to provide it for a greater audience, as well as providing the accessibility of having real money in your bank account. And I think this is a big point of differentiation with us. What we actually combine is a social context, if we go for beers or for pizza or for whatever, plus real friends, plus real money, and this creates the entire Cookies experience. And one thing that we are dedicated to really nail and to really be good at is the entire user experience. So we added a lot of gamification features within the product that makes it really cool to actually use. Okay,
well, we're curious since you're not live yet.
Yes, soon.
So then we have Erik from Scalable Capital. Scalable Capital is a robo-advisor. So what they do is they have an algorithm that manages your financial portfolio, your investment portfolio. So, and robo-advisors have been in the news recently because what they created for their investors in the end was a financial loss. So my question for you is, why should I still use Scalable Capital? Because I've tried myself, and I can create a financial loss without a robo-advisor. So,
well, first of all, our fees are lower, so the loss is lower than what you'll see if you use a banking advisor. But jokes aside, I mean, losses are relative. So since the beginning of the year, I think most robo-advisor accounts are down because the market was really tricky. So equity markets were down 20%, US markets down 10%. So it was just, and most of the robo-advised strategies are purely passive, so they just track the market, so they'll be down when the market is down, they'll be up when the market is up. We use a different method. We do risk management, so we try to reduce the amount of equity you have in the portfolio and invest into fixed income when markets move more than they should. And this actually for our portfolios helped to, for the low risk categories, we are up year to date. For the high risk categories, we are down, but substantially lower than the general market is down. Yeah. But generally, if most of the robo-advisors use passive strategies, they just move in sync with the market. Yeah.
Okay, thanks. Last but not least, we have Marko from solarisBank. And solarisBank is a bank that wants to partner with FinTech startups to provide its service to the ones that need a banking license but don't have one. So actually in the article that we had on Gründerszene when you guys started, you said that you want to distinguish yourself from banks such as Wirecard Bank by working out a financing model with the startups. To me, that sounds like you want to earn less money than Wirecard Bank.
Earning less money, I think this is not our goal in the first place. Earning money, I think, is very important in order to have a business model which is sustainable. And I think everybody who runs a business has to strive at a certain point in time to be profitable. There can be in the future because the targets might be different, but we're definitely not. Did not start the business in order to earn less money than Wirecard. However, the thing is to price. Pricing is Champions League, so I think this is there is no right or wrong with pricing. When it comes to the right pricing, which we try to find, and believe me, we are more wrong than right as well, is to work it out properly with the business. It's not helpful for either side if we only have, I don't know, 50 euros per month or if we have 100,000 euros per month. It has to grow with the company. So in order, especially at the beginning with cookies or with the robo-advisors, Scalable, or here with Bitwala, I think it's very important that you understand where the company, in which stage of the development is, because if you kill it straight from the beginning with 250k setup, the business is not going to take up. And I think what you have to do is you have to understand the business model in the first place, and I think that's exactly where we distinguish ourselves, because we come from a tech environment. We do not come from a banking environment. We built the company purely because of that, and again, we are more wrong than right as well, but hey, we just started a couple of weeks ago, so give us some time.
Okay, well thanks. I think we got a good insight into your businesses. So my first question for you guys is, this is about, right, how can fintechs actually reach the mass markets? And according to a recent YouGov study, you know, people just don't know you guys. I think the startup with the highest percentage in that study was Weltsparen with 9%, and the rest is just not known. How do you change this? What kind of channels do you employ to get people to know you?
Can I kick it off?
Sure.
Yeah, go ahead.
So for us at Cookies, reaching the mass market is really a combination of multiple things. So there are actually 2 to 3 big pillars to achieve a mass market adoption and mass market usage of our products. So the first one is product, obviously, which has to work. The second one is the brand by itself, and then you have a product market fit. And for us, to begin with the product, what we always try to do is just to keep it as simple as possible and actually provide a lot of value on top of what you get. So you get a lot of things for free, and the product is also for free, obviously, but on top of the normal peer-to-peer use case, you get additional services that are going to make your life so much easier. So this is point number one. The product has to be good. It has to work. People need to see true value in it. The second one is brand. So what we did from day one, we were kind of active in the media, and we had a lot of good media articles on different platforms, let it be TechCrunch or Business Insider or Bild or other platforms, which was very helpful. And for us, it's extremely important to build a brand out of the product, because at some point, products will become commodities, because you just, as you mentioned earlier, you have so many peer-to-peer providers and peer-to-peer apps, and it's important that you stick at the end of this entire journey, that you stick with one. And this one product will also be a product that has a strong brand and moves towards a lifestyle product. And
well, but I mean, when you don't take money, you know, when no one has to pay for your product, how do you even find out people want it when you once, at some point, have to start monetizing?
So, yeah, the monetizing.
Because I mean, that's a problem number 26 has right now as well, right?
Yes.
So
we're going to come to this in a second. But the last point being the product market fit, and this plays exactly along your comment. For us, it's very important that we provide a service that is useful for German consumers. So German consumers, in the most cases, they don't have credit cards. That's just the plain truth. The credit card penetration rate in Germany is lower than in other countries in Europe or even globally. So for us, what we decided from day one is we're going to support bank accounts. So every user that has an online banking credentials to his bank account can use cookies. And this is why we say we have a great product market fit, because it's just insane to see that Germany is still such a cash-intensive country. And as a matter of fact, 39.1 billion euros are being transferred in cash between individuals on a yearly basis. This accounts for 1.5 billion single transactions that happen this day. And we often get the question, yeah, but is there really a need for peer-to-peer payment app? It's kind of asking, how did people buy stuff online before eBay? Like they didn't. And the same goes with our product market fit. So right now, nobody's really sending money to their friends because there's just not this one-stop solution that really provides a convenient experience and really adds a lot of value on top of your daily habits. So those are our 3 pillars for adopting the mass market. It's just my part.
So can you guys maybe share some steps that you take toward monetization?
Well, I think I'll give it over to the B2C models because we are B2B2C model. And I think for us, reaching the mass market is less important, or we do it via our partners. So, yeah, Erik.
I mean, reaching the mass market, we, at least for now, in the beginning, we don't want to reach the mass market. We want to be very, very focused and very niche in our approach. Why? Because it's not because those are bad customers. It's just that the normal person doesn't care about investing. Yeah? And the normal person cares even less about clicking on our online ads and transferring 10,000 plus of his savings to us for an algorithm to manage. So trying to target these people in the beginning will lead to bad average customer acquisition costs, and we'll have problems funding ourselves because the whole unit economics will look bad. What we now do is we focus on one specific target audience. We call them smart professionals. So our customers are, the biggest group is 30 to 40 years. And these are people who have good jobs that are too smart to go to a bank for financial advice, but that are too busy to do it themselves. So it's young consultants, young bankers. Bankers are actually our most popular client group. No banker is going to buy his own products, so they use ours. Or engineers, so people that trust in a software-based solution. Yeah? If you're skeptical of, oh, there's a robo, there's an algorithm doing it and it can go wrong, we won't get you anyhow. So we're focused on computer scientists, on engineers. These are the people that we exclusively speak to now. Yeah, because as I said, our advantage is now we don't have 10 million customers and have to find out a way how do we grow to 20 million. We have 1,000 customers now, and we have to figure out how do we grow to 5,000, to 10,000. So we can and should be niche and focused. And this also leads to that currently, at least, our customer acquisition costs are a fraction of what they are in the industry. And it creates a nice trajectory for our business. Mm-hmm. And later, once you have that group, and this group is also seen as opinion leaders within their friends and environments, then we have to see how they recommend our product to their peers, and they come and use us because us or even robo-advice in general becomes a real alternative to get your money managed. Yeah, this is our approach.
Yeah, my company does the same approach. And Facebook does too. The target group of Facebook is still the Harvard graduate or student, basically. It didn't change too much because they're smart professionals. Mm-hmm. And once you have this, you have the low customer acquisition cost. I think what you have to distinguish or how you have to differentiate in this market, you have to go global from day one. And this is where basically, in my opinion, the blockchain comes in. There you can really have an impact, and you can get customers from around the world with a similar profile. For me, mainly expats, for example. People who have to deal not just with one, but with different currencies and transfer different currencies. This is really, I think, for 75% of the expats or like educated migrants, it's the toughest challenge.
Can I add something to this?
Sure.
Sure.
So I think just in general, just to be very clear, there are different types of fintechs, and different type of fintechs want to reach different type of markets, and this is very important that we distinguish this. So in our example, for instance, cookies is a product you use with your friends. So obviously, it's not compared to any other fintech product. So if I want to get a loan, I want to get a credit, or this is a product that I will very likely consume once. So I'm going to get a loan, I'm going to consume it once. and then I'm going to go back to the platform maybe 10 years later if I want to get another loan for something else. With cookies, what we try to do from day one is to create a habit in the usage of our product. And because you use it not only by yourself and you consume it by yourself, but you consume it with friends, you also have something that's called the network effect. And for companies such as Cookies, which is a peer-to-peer company, it's obviously important that we adopt mass market as soon as possible. But obviously I can understand it depends on where you are with your company, what your goals are with your company, and then you can decide if you want to go mass market or if you want to actually just focus on a niche product. So this is why I don't think there is this one solution fits all for everyone. I mean, he said going global. For his use case, it makes sense because he does foreign exchange transactions. But for us, it's meaning staying local, as in Germany, but growing big in Germany.
But do you think you can grow big on your own, or do you need maybe some kind of FinTech hub, such as Number 26 is building, so you get access to more customers? Or, in the end, do you need a bank that acquires you, or what are the options there?
I think partnerships are crucial to grow.
Definitely, that's one of the reasons why we created this company, in order to build basically the platform for companies like Cookies or the others, but not just for fintechs. And I think it's the question is not whether you reach the mass market or not. And I think here the example is very clear: one mass market, but rather in a targeted area. And here it's rather not the mass market. I think it's rather the question of reaching relevance. And the question is nowadays, the Sparkassen, they clearly have reached the mass market, but are they relevant? The question is, I'm not saying yes or no, I'm just asking the question. And I think this question has to be asked by any company out there in the space. Do you create a relevance in your specific space? And I think this peer-to-peer payment scheme like Kringle, Lenstar or Cookies, I think it's relevant because you are faced with the same problem, as well as with the Bitcoin or the blockchain. Blockchain will be the biggest change after the internet, when we just look back 15 years or so. Are the business models there already in order to change something really big? No, I think they are not. For a number of reasons. Scalable and the robo-advisors, I think they made a huge change in the way how you work with these basically with your target group. Yeah, really lean and technology focused. And why is that? Because technology has changed in the last 6 to 8 years more than it has changed in the last 100 years before. And I think that is just answering to specific parts. And I think, you ask a very specific question about, do you think it makes sense to be acquired? I think yes. And I think if large banks weren't so stupid and had their head up their own back, they would realize that they have to push partnerships, that they have to push takeovers, but not in order to crush them, which very often happens as well, but rather to see that the world has changed, for Christ's sake. This is our kids, they don't go to a Sparkasse in order to look for a credit or to get an advisory. They go to Google in the first place. And that's how this whole thing is changing. And when you talk to executives from traditional banks, they haven't realized that yet. There's a thought process starting, but I think this is they should rather look at what these guys are doing, or we are doing, and see whether it wouldn't be a clever target to take over.
You said something interesting, though.
Always.
Yeah, no, it's always. No, but if I can recall back from what you just said, you mentioned it should be kind of an objective, or it should be good for a startup to be acquired by a bank. At least this is what got stuck in my head, and this kind of confused me a bit. Like, from a bank perspective, it makes sense to acquire a startup that is doing well. Obviously, it does make sense because they want to have a piece of this pie, and then obviously what they can do, they have a lot of money on their balance sheet, and they're going to acquire a startup. This is easy for them because there's no work involved at all. But if you're a startup, like at least in our case, it's not our objective that we're going to get acquired anytime soon. Like, even though we had a few nice offers, etc., but like this wasn't the reason why we started doing this. We really wanted to solve a problem that is affecting the mass market. And even though it's kind of difficult for us, I mean, Bitwala is playing in the exact same category here. We actually have to create the market. It's not that if you take a look at Scandinavian products such as Swish, or if you go to the States and you see Venmo, like Venmo is transacting $1 billion per month on peer-to-peer transaction, which is a lot of money. Like, just again, in comparison, this is per month, and in Germany it's 39 billion euros per year. And with a little app, they already change the behavior of a bigger audience. And for us, this is also our objective and our goal. We really want to change the behavioral usage of banking products with our users, and really want to make sure that we provide some additional benefit. And I don't know if in our case being acquired by a bank would actually help. It would surely help with regulations, but regulations are more of a economical factor, as in like we just need to pay a lot of money to get regulations done. And this means getting lawyers, getting approved by different authorities, etc. But for us at least, and I can only speak for Cookies, the ultimate goal is not to being acquired by any banks. It's to grow by ourselves and to grow organically and well.
Do you think that regulation is too strong in Germany? Because
well, you make it here, you make it everywhere, right?
Sorry?
You make it here, you make it
See,
everywhere.
that's what most people say. So apparently, it's not that bad. You know,
it is,
says,
but once you go through,
really
it's
well.
a reputation. Once you go through, it's good for yourself. Yeah.
I mean, in general, I think something that all startups are kind of proud of saying is that we provide bank standard security. And we have to provide bank standard security. So even if it's a product like Cookies, it's not that you need to be afraid of your money or money will be gone or something. We have to be audited by external parties on a regular basis. We have to be audited by our partnering bank on a regular basis. And this is just something that is obviously extremely complex, especially if you want to try to make real-time transactions such as we do from bank account to bank account. It even gets more complex to do something like this. But at the end of the day, regulations are kind of a bottleneck, but they are also a necessary evil. It's important that every German consumer feels protected by the regulations imposed by the BaFin. And we couldn't agree more. And obviously, like, it's a huge barrier of entry, but at the end of the day, it's what's going to keep the consumer safe, and it's also going to push the consumer to actually use the product because he knows that all of us are providing banking standard security.
How's that for you, Jan, since you're using Bitcoin in your company? Is that more difficult to talk to regulators, or are they all really firm in
It used to be more difficult, especially for banking providers, to talk about all about this topic. But once we substituted the word with blockchain, it's not difficult anymore. And it's just
understand it.
Yeah, exactly. And at the end, it's just software, so it's kind of regulated already, and it will find its niche, I'm pretty sure.
Okay, so from what I've heard, you guys don't think that blockchain is overly hyped. Maybe you can explain a bit where you see use cases for yourself and how this can actually make an impact on the masses.
You want to kick it off?
I mean, blockchain as a technology, I think is not overhyped. Yeah? And the cost-saving potential you can see. I mean, pretty much banks can get rid of the middle and back offices. For us, at the current moment, it's not that relevant. It's not core to what we do, but yeah. And also it belongs into every startup FinTech discussion, the word.
Exactly, yeah. If you don't have a strategy for your startup right now with blockchain, it's like having no internet strategy like 10, 15 years ago, in my opinion. And I totally agree with my neighbor. It's going to change across industry, a lot of use cases for each industry.
Erik, do you get nervous? Or didn't you agree?
I mean, it depends on the business model. I mean, for us, obviously, it would make the business cheaper and faster, yeah, instantaneous movement of ownerships, because we are dealing with security transfers, so it would certainly help. But when you currently, I mean, we're now starting the business, and we have started the business now. The blockchain is not a common standard yet to settle securities in the Eurozone, so we can't use it yet. Yeah? I just wanted to mention one point regarding regulation, actually, because this comes up quite often. Because we are regulated, we decided to go for BaFin license as well as a FCA license. It took quite some time, 1 year in Germany and 1.5 in the UK, actually. But our experience is that regulation is actually not too, it's not per se too high, and the regulator is very, very pro-technology. Yeah, that was actually the biggest surprise, how much in favor of the new developments they are. The main problem is that the laws are very old, and the laws don't belong to a digital age. And just one example, account transfers. So you don't want to give us cash, you want to give us securities. You already have an account somewhere. This can't happen by law without a wet signature yet. Yeah? So, and without a wet signature means people have to print out stuff. They have to send lots of people don't have printers at home. So it's rather that the laws are very old and have to be amended to really make it fully digital. but the regulation per se is not too high, and it's quite in favor of what's happening currently, actually.
Depending on the model again. And on the
yeah, depending on the model. I can just speak
depending
for
on
our
the
model, obviously.
yeah.
You said this. I mean, you have a model that has, as you said, like network effects. We don't have network effects at all. So if and the second customer arrives, it doesn't get better for the first customer. He sticks to the same service level that we provide to him. But so yeah, depending on the business model, I can just speak for ourselves. So, but when you manage other people's money, yeah, there's just one way you need to be regulated. Yeah? And there's also a reason why certain areas are regulated and certain are not, because you're not buying a product from us. Yeah? You give us money, 50,000 euros. I don't give you something in return, a car that you can look at. I give you a promise that I'll make more of it, out of it in the future. And because of that, there was huge fraud in the segment, yeah, and huge misconduct. And that's why it's regulated and makes sense. Yeah? I wouldn't like my mother to go to a fintech that's not regulated in investment management. Yeah.
But ultimately, the goal of regulation is consumer protection. And are my funds safe? Is my identity safe? And so on. And this is a really good thing.
Since we're talking about the consumer, let's talk about trust, because they definitely need to trust you to give you their money. And in recent weeks, the US startup lending club had a big scandal. The CEO had to step down because some of the credit packages were wrongly labeled. Then last week in Germany, number 26 terminated a couple of contracts, well, actually many, and they got a big shitstorm. Does this affect you guys? Do you feel people get more insecure, or doesn't it affect you at all?
May I take this one first? The lending club thing, I think, could have happened to any other company as well. You see this with Volkswagen, that there was just some shit happening. You have fraudsters everywhere. Let's face it.
Oh, I agree, but you know.
But just in order to put things into perspective, yeah. Sure. Obviously, when you're in a field and everybody is looking at you specifically, you can't do a wrong step because everybody will just take that step. Second thing with number 26, well, I mean, I don't know any bank who hasn't fired customers. So was it very clever? Was it done in a very smart way? Apparently not, because it was a shitstorm. But I think it's the right of any customer or of any company to decide with whom they want to work with. That this was not very well thought because of, I don't know, they were taking out customers who were apparently bringing a bit more cost than they would have expected. Apparently the money was running out, I don't know. So a couple of things, that was creating a whole thing in itself. But just firing a couple of customers, I mean, Sparkasse, Deutsche Bank, everybody, it does, not only those, but every other company that does it as well. And I think it is its good right to do it. But the issue is here, there's two events which I think wouldn't have changed the world, but apparently now all fintech is bad, and all the no-sayers from a non-digital age, they say, look, these guys, they're all bad, they are all cheating you, etc. And this is a whole thing which creates in itself. And I think there's one thing, like I don't know who said that, but trust is like an airbag. The more trust you get, the bigger is the buffer zone you have once shit hits the fan. And I think this is Lending Club is quite old. Well, 2006, so they had 10 years time. I think they have trust, and yeah, okay, they're going through a rough patch, but will they disappear? I don't think so.
How do you guys handle that, though?
I mean, my view on that is a bit similar to what you say. I mean, the Lending Club thing, you have to differentiate. That Lending Club thing was, to a certain degree, a fraudulent activity, and that's why the CEO had to step down. Same with Zenefits a couple of months earlier, manipulating or selling insurances without being licensed. I think these, you just have to have controls in place that hopefully these things won't happen. So, I mean, for example, as a young fintech startup, I can just advise, get a chief compliance officer, a dedicated person, as soon as possible. Yeah, we had a chief legal and compliance officer as one of the 10 employees, one of the first 10 employees. It feels too early because you want to build product, you want to spend money where it actually creates revenue and customer experience and not compliance, but do it as soon as you can, because these things are life-threatening if they happen, yeah, or can cost the CEOs their jobs. The number 26 thing was something different. They didn't do any, the communication was not handled well, but they didn't do any fraudulent things. Nothing was illegal. They didn't try to hide anything.
Yeah.
Still, it raised a lot of distrust,
what I
right?
completely
So-
disliked was the Schadenfreude by the media.
Yes.
You know? And almost gleefully, I mean, it was a complete non-event. Yeah? Out of 160,000 clients, they fired a couple of clients who every day who never did a transaction, who every day took money out of the system, which even by law you need to look into these things because it just looks like money laundering to me. Yeah, if I had a client like this, it's just completely unnormal client behavior. And the way the press jumps on this, yeah, there was a big article in Handelsblatt yesterday, gleefully with so much Schadenfreude. This is, I don't know, this is bad for the entrepreneurial culture that we have here, I would say.
For the industry in general.
Yeah, it's, I don't know. It's also, I mean, this annoys me every time when there's also an article on Gründerszene, when you read the comment section, yeah, just 9 out of 10 times, people are just taking the piss, yeah, it's really annoying, yeah.
Yeah, but there you can see, you know, how do you deal with this? Because you, in the end, have to communicate to these people who are really agitated.
Yeah, how do you deal with this? So, I mean, these 2 examples, I think Lending Club, yeah, shouldn't have changed contract data. that's for one thing. And so I think the internal controls didn't work well. Yeah, I mean, because that was not done. You can have a data leak, which just happens, but this was done. This was done deliberately by a person. It was signed off deliberately by someone else. So bad controls in that case. And number 26, I think communication strategy. I think the next time they'll be smarter about this. They didn't expect this. I wouldn't have expected it, to be honest.
Mm-hmm.
Yeah, when it would have been my decision. Yeah, I think more open, faster, complete transparency once you do something. That's the only way out of this actually.
Yeah.
But it won't damage them. I don't think it will damage them.
Okay. So maybe we can talk a little bit about Rocket Internet. Because Rocket, of course, is a company that wants to make startups big really quickly. And I guess it's safe to say that in the FinTech segment, that wasn't really successful for Rocket Internet. Paymill went bankrupt, and they sold off Pay11 and Zencap. Why do you think that didn't work out? Or do you disagree with me?
No, for me personally, I think in general, like the rules of e-commerce don't necessarily apply to FinTech. I mean, if you are an e-commerce business, obviously you have goods and services. If you're a financial technology-driven company, the only thing you have is information. So this is why the behavior and the way you build up a company is, first of all, fundamentally different. So as an e-commerce company, if you take an example as in Zalando, for instance, you pump a lot of money into marketing to make the brand really big and to try to get your consumers to use it. Ultimately, this could also apply to a FinTech company to reach mass market, but it's just the marketing side. But the way of scaling a FinTech company and building a great product is not by going from day zero to day 1 with 100,000 users and really just trying to get users and use users. You really need to convey trust, and trust just takes time. And like in our case with Cookies, trust comes because, again, you have real friends, you have real value, and you have real money. And if I send money to you and you have the first positive action and you're happy about it and you check your bank accounts 5 minutes later and the money's already there, you're going to say, oh, this is cool. I'm going to use it the next time. And then the next time and the next time. And you have networks effect to actually scale it. But just trying to do performance marketing for the sake of doing performance marketing and getting as many downloads as possible, well, for us in our case, will very likely not result in a positive outcome. So for us, it's very important that something like this grows organically. And I mean, let's just be very honest. They are known for applying quite a pressure to founders and to companies in general. And at the end of the day, every founder has to decide how they would like to approach and how they would like to grow their market. And if you're very advanced in your stage, maybe you don't need them. If you are or you are advanced in that stage and you need them specifically for growth purposes or whatever. But I think in general, Rocket Internet has a lot of great advice when it comes to actually making a brand known and to pushing things out. If they are always successful, well, that's a different thing. But I mean, like, we all are reading the news, I assume, on a daily basis. Like, a company gets shut down, another one gets shut down, people get laid off, etc. And it's just a scenario that I don't think that a user or a founder like me for Cookies would wish for a company outcome.
Mm.
What do you guys think? You reserved on this? Don't be shy.
And who they sold Pay11 to, or to Visa Master, or
Sum up.
some?
Sum up.
They did a merger.
Well,
Okay.
Yeah,
It
they
wasn't a
merged.
merger.
Okay. Yeah, I think if you want to be successful in fintech, you have to eliminate a lot of middlemen which are there, who takes the money and time basically, and the trust too. And in my belief, you can only use the blockchain through it. You will not ultimately remove any middleman, because people always want UX, they want usability, or they want the security not to hold by themselves because they don't trust themselves, let's say. So that's why you always have to check your own preference. Do you want privacy, security, or usability? And then you will have a middleman because that's comfortable. And these middlemen will exist till the end, I think. Yeah. But they will be reduced from 5 between a transaction from a peer-to-peer to maybe 1, I think, on average.
No. Do we have time for Q&A?
Yeah, we have time for Q&A.
Okay, thanks guys. I'm sure you have questions. You can ask them now.
Please ask
We
questions.
have a couple
Don't
more.
be afraid.
I mean, I have more, you know.
Nobody? Come on.
Nobody interested?
Yeah.
Very brave.
I have a question to Jan. You told you use Bitcoin, as far as I understood, to transfer the money from the customer to the customer, so making the transaction itself. What are your risks actually of using Bitcoin? Because exchange rate might change dramatically, going up or down. So what are your thoughts on this issue?
Volatility isn't an issue since a few years already, because market is highly liquid with a ridiculous low spread, and you can just fix it right away. So volatility is not, it's clearly regulation because the laws are not written for that technology yet, and banking partners are uncertain about your business model. Yeah, this is a major factor. And we were talking a lot about brand, and the brand of Bitcoin is pretty bad, still pretty bad. I think it's going to change a lot, but this is a perception in the media, and this is totally biased because they're missing the technology part, I think.
We have time for one more question, if anyone wants to. All right, great. Thanks. Now everyone. Okay. Wait. There's one over there.
So I have a question for Marko. Do you think investment literacy will be an important topic in the future, and brokerage portals again? So people will try to manage their own different strategy portfolios. Can you see a future in that direction, or do you think that's rather not the way we should think about if we think about fintech startups at this point? We should rather think about loans and credits.
Well, I think it's more a question to Erik, but as you asked me, well, I think this, first of all, the entire development around robo-advisory shows a very clear movement towards this direction. And what we do basically is we give portals. We were asking about portals, the possibility to build their business models on it. Whether they are successful with that or not, it's not on us to judge. We really give them the possibility to build their portal on our technology. Whether there's a market, we cannot decide. Really, and we don't even look at that from this perspective. We say, okay, very clearly, whether it's a loan, whether this is a deposit, whether this is any other asset class, whatever you have it, these guys are the specialists on it, and they should look at this market. And if they think they can be successful with that and can convince us as well, we will help them to build the portal. Just in the direction.
Okay, last one.
Okay, hi. Let me just introduce myself. I'm Cynthia from Swiss business magazine Bilanz. And I think I have more or less 2 questions. The first one goes in the direction to Bitcoin and blockchain using. In Switzerland and also in London as the financial place, also fintech place to be. In Europe, they don't talk anymore so much about Bitcoins or blockchain. The new Bitcoin is Ethereum for them, and also the crowdfunding for the DAO project, which came up to, I think, more or less $200 million is now new high. Do you think that you're already, let me say, up to date with these kind of innovative mathematic strategies? Do you need to implement them? It's the first question. The second one.
Well, you can ask that one later,
Okay,
maybe,
okay,
because we're running out of time. Sorry.
Okay, there are more than 500 different cryptocurrencies, but they're like only 10 to 20% of the whole market. The rest is Bitcoin. So you can't convince people to use a few payment apps, a few protocols. Even if there is something better than MP3, and there is, I'm sure, you will stick to MP3. And it's the same with Bitcoin. And if it comes to Ethereum, that's a really smart thing. It's about smart contracts, and it will be implemented on top of the blockchain, basically to execute your financial transfers or whatever value you want to move. Yeah.
Okay. Thanks, everyone.
Thank you.